Hello everyone, welcome back to the 16th and 17th episode of the 2026 Portfolio Challenge series. We've had a pretty interesting past 2 weeks, and I'm very excited to get into everything. I apologize for taking the short break, but I just got pretty busy with school. So I just wanted to touch upon, note how almost all of our portfolios except for the meme stock are currently in the positive, and two of them are currently beating the S&P 500, which is the deep value and the 2026 main portfolio. Both are doing very well right now. Disclaimer, this is for entertainment and educational purposes only. I am not a financial advisor, and this is not financial advice. This is all done on a paper trading account, and these are all simulated trades with no real capital at risk. Itinerary today, we're just going to go over the portfolio's performances again, some watch list news, and then the big thing that happened is that I sold SanDisk and I bought ELF. I wanted to sell Robinhood, but I was very busy with school and I wasn't on top of this challenge. So when it popped up to 90, I did not sell, even though I told myself I'd probably sell it at 85 to 87 range. And now it's back down to 70-ish, so we'll see. But yeah, I did sell SanDisk and I bought ELF. I also want to talk about Robinhood earnings. So the 2026 main portfolio, as you can see, I sold my SanDisk. You can see that it is not there anymore. And I've got quite a bit of cash now. I did use a lot of that to buy ELF. I think I put like $6,000 into ELF in this portfolio. So you can see that ELF is 18% now instead of 11%. And this is with ELF dropping to $60 right now. Here's my profits and losses. Thankfully, SanDisk pulled me out of the negative right now, and Robinhood is doing decently well currently, although I expect it can be much better. A big loser currently is Celsius and Adobe, Novo Nordisk, and UNH, which I'm not in them anymore. And Micron is still a very big position, so I'm still riding that one. In the deep value portfolio, once again, I sold my SanDisk. I did have SanDisk here, yeah, $12,000 here. And I sold it, so now I've got a ton of cash. I think I also bought Amcor this week, and Gen, which is an electric company and a supply chain company. And again, this is just a pure forward PE play with some guardrails regarding the company size and their sectors. So currently not great, but it's holding up decently. It is up 12%, so I can't complain about that. Here's my deep value portfolio gains and losses. SanDisk obviously is carrying it hugely. And then these four I've already gotten out of, so everything else I'm holding is still kind of negative. The choice value portfolio. This is my value formula picks, which is basically price targets, and it's weighted by conviction and IV, volatility. You can see that I also sold my SanDisk here, $17,000 of it, and I got cash with it, and I also okay, yeah, so I've got a lot of cash for this. The cash was zero. I'm sorry. I thought the cash was Micron here because of the colors. Yeah. So I sold SanDisk for $20,000 in cash. Here's obviously my profits for the choice value portfolio, which is SanDisk still leading it, Micron right behind it, NVIDIA and TSM doing solidly. Actually, NVIDIA, I almost exited that. I said I'd exit at 220. So I am waiting for their earnings before I do exit because I have a feeling that NVIDIA, as always, will crush earnings. But there's a bit of time for that. And again, most of these I'm already out of. With Celsius, I'm still holding that with a bit of hope, but not much hope left for that anymore, I think. I might enter ELF here. I gotta check the math on that because it is based on 25 forward PE based on the operating incomes. And these are all Wall Street estimates that I just pulled up. And we can see that it should be trading at 90 in a year from now. And at the end of the year, it should be between 66 and 85, I expect. So I do still see it hitting 80, and the price is at 60 right now. So that's 30% markup price target. So I will be buying ELF in this portfolio as well. That fits it. My meme stock is performing better than previously. It's currently also still just holding Robinhood calls, and I'm still doing the poor man's covered call strategy. It was, or it should have been in the bonus when Robinhood hit 90, meaning not bonus but positive when Robinhood hit 90, but I had covered calls at 75 because Robinhood decided to go up 30% in 1 week. That's part of why the past 2 weeks was crazy. But again, I wasn't paying attention to the markets. So I did not have time to adjust the covered call. So this stayed mostly the same. And now that Robinhood's back down, no gains, no losses, it's as if nothing happened. So SanDisk. My price target for the year was $1,000. That is not my long-term price target, is around $1,500, which is pretty decent. And I have a feeling after these upcoming earnings, closer to $2,000. But I did want to sell at $1,000 because I did want to free up some cash just in case the market tanks again, like it just did for everything that's not SanDisk and Micron, apparently. And Google also had really good earnings right now, which I did not add this to the slide when I was making it. So it tends to be strong on momentum, and that momentum to me appeared to be closing. We'll see. It does have earnings this week, and I'm expecting a huge beat for them. Them and Micron, like I've already said multiple times, they basically have a duopoly on RAM in the US. And there is going to be no shortage of need for RAM right now. Everybody needs RAM. And not for video games. I'm talking every big AI company is now needing RAM. And with Google and even NVIDIA have their own model. The Google Gemma model and the Google Gemini 3.1 Pro, those are huge. And I think Google also just showed that with their recent earnings, which again, I'm not going to talk about it this week. I'll talk about it next week because I just haven't done my research on that yet. I just finished my semester 2 days ago. And here I wrote that if they beat significantly, I will still add again, even if it's at 11. If it's undervalued, it's undervalued. You know, worst case, I just missed that jump from $1,000 to $1,100. It's no big deal. It's 10% out of something that could be another 100% run, potentially. ELF, like I just showed you, my price target for 1 year out is $90. Current price, it's a bit under 63 right now, but it has touched 120 multiple times over just in the past year. This is where it's at right now. So it's basically at zero over the past 365 days, but here's 120. If you can see my cursor, I'll even put an array for that. Here's 120. I put up a line. It hit once, twice, 3 times, 4 times, 5, 6, 7, 8 times over the past year. And even after it dropped significantly after November, after its big earnings in November, that caused a significant drop from 115, and it closed at 80 that day, or a bit below 80. It closed at 75 that day. Even after that, it still ran up and it touched 90 multiple times recently. So if I move this blue line to 90-ish, right, it's 1, 2, 3, 4, 5, 6, 7 times it's touched 90. And that's not a fluke. It's because they have really good management. They are very aggressive, and it's just a huge makeup brand that is just outperforming basically all expectations every single quarter, right? I mean, look at these estimates, look at the reported, look at the revenues. That's the past quarter. That's the one right before it where it did miss the revenue. But it just keeps beating, and they keep growing very aggressively. So I have no issue loading up on ELF at these prices. You know, it might be another 6 months, but I do fully expect it to hit 90 this year, even though my price target is 90 for 1 year out from now. With this volatility and momentum that the stock usually has, I fully see it touching 90 multiple times this year. Now with ELF, so yeah, like I said, once oil drops, petroleum is used a lot in makeup. So once the price of oil drops, once the Strait of Hormuz once the Strait of Hormuz reopens, once this war with Iran finishes, I fully expect it to recover pretty decently. And again, I do have very high conviction, if you couldn't tell from my voice. Now, Robinhood, my pre-earnings target was 90, and it hit that. And I was not paying attention to the markets. So I wanted to sell at 87. I remember telling myself that, and I didn't. So that kind of bums me out because it's back down to 7. And their earnings weren't very good. So my post-earnings new target is $82, which is a significant drop from, it was 105, I think, at some point. It's just a big drop. And what happened is basically they had a huge deceleration in growth. And the Trump account things happen to be basically a nothing burger. So Trump accounts are not being labeled with any Robinhood labelage or signage. It's literally just Robinhood being the broker for the Robinhood accounts, for the Trump accounts. So that's basically nothing. Now, it still does have very high volatility, which is good for the IV, which is why I'm still running the Snowball Poor Man's Covered Calls on the meme stock. But I am not currently selling covered calls on the rest of my portfolios. I might actually, because it does still have pretty high volatility. But if I do, it'll be pretty safe. So we're talking, 60 to $100 a week, holding 200 shares. So that's not much, but it is something. So I might just do that. We still got 30-ish weeks in the year, at least 30 weeks. So that could be a decent $3,000 added to an otherwise losing stock. Now, what is to come? Why am I still very long-term bullish? So within the next year, will it hit 90 again? Honestly, probably, unless Bitcoin drops significantly, but we'll see. It does have 24 hours a day, 5 days a week trading coming very closely. It seems the NASDAQ is pushing pretty hard for that. And then they also just got approved for their Singapore expansion. And while Singapore is a tiny nation, a few million people in it, it's a very rich nation that's huge on finance. So Jane Street and Susquehanna, I think, never mind. But for sure, Jane Street, I know, which is one of the bigger quants. They have a Singapore base, and it's one of their more profitable ones. And then they're also expanding their credit card expansion, and they are closing their spending accounts coming up, which kind of bums me out because that is a bank account. And while I do have bank account access to them, I need to set up direct deposit. Kind of don't want to do that. So we'll see what happens for me personally with that. But I do love, their credit card is going to start raking in a ton of money once it's not the very safe customers, as we say. So that's that for the presentation. I did want to take a look really quickly at Robinhood. So just so you guys can see what happened past 2 weeks. So yeah, it started roughly here. So this is Monday of last week. So April 3rd, Monday, it opened at 68 for the week. Friday, which is here. This Friday, it closed at 90.82. That's a 32% week. Now, the next week, it did drop down to 82, 83. And then with the earnings, it dropped back down to 70, obviously, because the earnings were pretty... they missed on both earnings and revenue, which is kind of confusing for me, but oh well. I thought with the war and everything going on, prediction markets with March Madness, I thought it would do a bit better, but we'll see. I do like their management still. And I did want to talk about U.S. oil. So here we had the past 2 weeks, we had talks about the Strait of Hormuz and the war ending. So the Strait of Hormuz reopening. And then all those talks basically didn't happen. So oil's back all the way up to 1100. And they're at like 1070 right now, but just an insane run for this stock right now. And Micron's kind of behind them, but yeah, I fully expect Micron to hit 800 this year. Micron is going to be a beast, and once people realize that, it's going to run the same speed that SanDisk ran, I think Micron's also going to get. And Bitcoin is actually holding up decently well. So it ran up after the talk started for the end of the war, the ceasefire. And, people just haven't sold it yet. So it's still 76,000. It was low 60,000s for a while. And we'll see. The only reason I care about Bitcoin, by the way, is because it's very correlated with Robinhood for some reason. And it is a measure of market, not liquidity, but how people feel about the market risk. Okay, I think I've blabbered on long enough. Thank you guys for listening. Good luck this week. I'll see you next week. Bye-bye.